This episode is brought to you by RE/MAX Ace Realty in Downingtown, PA. Whether you're looking to buy or sell a home, we have a real estate expert for you. Search for homes or contact an agent at acerealtypa.com.
This is the Chester County Real Estate Podcast, bringing you the info you need to make your next move a great one. This show is brought to you by RE/MAX Ace Realty. For show notes and links, go to acerealtypa.com/podcast.
Hey everyone, welcome to the Chester County Real Estate Podcast. This is the show that gives you the information you need to make your next move a great one. I'm your host, Sean Dominski, and today I'm sitting down with Maureen Felizzi from Liberty Mutual. So, Maureen, why don't you tell us a little bit about yourself?
Sure, thanks, Sean. So as Sean said, I'm Maureen Felizzi. I'm with Liberty Mutual Insurance, and I've been in the insurance industry for about 17 years now. And I specialize in personal insurance, so anything that you would own or insure personally. Think of like your homes, autos, boats, RVs, stuff like that. I am local to the Downingtown area. I have an office in Exton, and I'm licensed in all the surrounding states. So Pennsylvania, Delaware, Maryland, New Jersey, New York, and I have Florida as well. So it definitely can help with anything locally here.
Awesome. Yeah. So today I want to talk a little bit about what homebuyers should be looking for in an insurance company and what questions they should be asking themselves and what they should be asking their insurance company when they're in the process of buying a house or thinking about buying a house.
Good question. No, I always say that I'm like the last piece of the puzzle in the home transaction process. Your lender's going to need the declaration page and invoice to get through settlement. And I always say that, it's one of the most expensive purchases you'll ever make in your life. So you want to make sure that it's insured properly if something were to happen. Yeah. So I just stress the importance of having a local agent like myself, somebody that can kind of guide you and, get you through the process to make sure you have what you need for settlement. Some important things to look for, what I stress with my clients is, contact me when you're in the process of going under contract. I'll run the initial quote for you for the home insurance, and I can let you know if there have been any claims on that property in the last 5 years. That way, if you're going into an inspection or, maybe you saw some water damage that didn't look right, I can say, hey, maybe there was a water claim, or maybe there was a claim with the roof. Make sure that that was properly repaired. So just little things like that to look for, I think, are important.
So real quick, and that's funny because as a buyer, seller, agent, in my experience, I didn't even know really too much about that until an agent told me about it. So you said you can look at all the claims within the last 5 years. So if they did a claim before that, it wouldn't be on there? Yeah.
So for most insurance carriers, we're looking back 5 years on the claims record on that property. So if you're purchasing a property and there were a number of claims that previous owner put in, I can look at that, see what was paid out, and have a general idea of maybe what the claim was. And it's a good conversation because with my clients, they might say, you know what, that was disclosed on the seller's disclosure, so good to know. It looks like everything was repaired. There wasn't any issues. But if it was something that maybe didn't come up or they weren't aware of, it just kind of sparks that conversation and that question just to make sure everybody's doing their due diligence here and making sure that, if the claim was submitted, was the repair actually made too?
That makes a lot of sense. Yeah, and I feel like especially if you see any of those major repairs on the seller's disclosure, you definitely want to look into that.
Right. So another thing is flood zones. So I can look at an address. So maybe you're contemplating a few different properties and, hey, Maureen, I'm not sure. Is this in a flood zone? What is flood insurance going to look like on this property? That's a biggie because I always say flood insurance can kill deals because you want to know, if it's in a flood zone, you'll probably know typically right away. A lot of times you will know before coming to me, but if you're unsure, I'll have realtors or clients call me and say, can you check this address?
Right.
There's a stream out back. I'm not sure what's going on here. So I can let you know, A, if it's in a flood zone, and B, what that cost might look like for flood insurance because you're going to be required to have it, if you have a mortgage and it's in a flood zone. And depending on the type of mortgage you have, you can either go with the FEMA flood, which is typically for FHA loans, or a conventional flood policy. You can do a private flood for conventional loans. So that gives you more options on the conventional side because with the private flood insurance is a little less expensive a lot of times than the FEMA for the most part.
So So first of all, I always recommend, like, whether there's a stream nearby or not. Like so we're in Downingtown right now.
Yeah.
If you're buying a house in Downingtown, you need to look into flood insurance.
Definitely.
And don't take the owner maybe the owner, but don't take the agent or the MLS's word for it. Like, you have to verify that, because first of all, it can change over time too. Right. And real estate agents make mistakes when they enter stuff into the MLS. So verify. Or even when you're checking, because you can check, and there are ways to check whether or not a house is in a flood zone or not. But you need to, talking to an agent would probably be the easiest thing, or talking to a insurance. Sorry. I should whether I'm talking about real insurance agents or real estate. So your real estate agent is doing a lot and might not be looking at certain details.
Yes.
The best thing to do is talk to an insurance agent. That way they can verify it. So if you're in Downingtown especially, but really anywhere in Chester County would not hurt to verify whether or not it's in a flood zone. Whether or not there's water nearby, or if if there's water nearby.
Right.
The other thing is so talk a little bit more about the FEMA flood insurance versus the private flood insurance. And this is kind of regional specific. So I'm sure if you went to the shore, the flood insurance is a completely different animal. I know for a long time, while I've lived in Downingtown, flood insurance was a burden. People were like, "Oh, it's not in a flood zone. I don't have to pay this money. It affects the value, and I don't have to pay this money." However, we hit this flood, and people are like, "Oh, they were really angry because their house flooded and they didn't have flood insurance." So I don't want to talk too much. I feel like this could be a whole day-long conversation. But real quick. Let's talk about the different types of flood insurance, what's required where, and what's the deal with being able or unable to get flood insurance? Because some people are unable to get flood insurance, correct?
They wouldn't be necessarily unable. They might not be able to afford it. Like, it could be too costly to where, like, they just can't pay for it. I mean, the shore, the coast, that's a whole nother animal.
Yeah.
So speaking specifically to just this Downingtown area, we had a flood situation in the fall. Was it September of last year? So anybody can have a flood policy. You don't have to be in a flood zone to purchase it. So just putting that out there. So
really?
Anybody can have it. Yeah.
Because there's a lot of people who thought that they were unable to get flood insurance, but it was just that it wasn't required.
Yeah, if it's not required, you don't have to have it, but you can always purchase it. So, because you can live outside of a flood zone and still have a flood claim or a flood situation, which is exactly what happened in Downingtown last year. I had definitely gotten a few phone calls from people who were outside of that floodplain and they had flooding in their home, and it was very unfortunate. And I hate getting those calls, because it's you don't have the coverage, unfortunately. But for the people who do and that are in the floodplain, like, I guess depending on which part of the flood zone that you're in, that will affect and impact the pricing, especially with the FEMA and with the private flood. The FEMA is kind of like regulated set rates by the government. So here's what it is, and that's what you're getting. I don't really have any wiggle room with that as far as making changes. You can go higher with the deductible, so that will help lower your premium in any insurance situation. So that's an option for people.
So you said the FEMA is required if you have an FHA loan, but if you have a conventional loan, you can get either or? You
can get either or. So so if it turns out
because that's up to the lender.
Yes, the lender, what they'll accept. So if the FEMA rate turns out to be better, we go that route.
Yeah.
I just find a lot of times with the conventional, you're going to do better with the private because we have more flexibility. Flood on the FEMA, they're only going to cover a rebuild value of up to $250,000, so you can't even go over that. So if you have a house that the rebuild value is higher on that, then they don't cover it. And there's a limit on your contents too that you can put on the FEMA flood. Where the private, you can kind of go up and add different things as much as you want and what you would feel comfortable with.
Interesting.
Yeah. So getting onto rebuild values too, we had talked about that a little bit earlier. Every insurance company is going to estimate the rebuild value of your home. So when you call me for a home quote for this property that you're purchasing, we're going to go through specifics about that house. What's on the exterior? What type of roof do you have? How old is the roof? Do you have a finished basement? Is there a garage? How many bedrooms, bathrooms? What type of flooring? What type of heating and air conditioning? Do you have a deck? all these different things can add into what's called our rebuild value. So based on that information, we determine what we estimate the cost would be if there was like a complete fire situation, as an example, where we would have to come in, remove all that debris, and then rebuild your home again. What is that going to cost us as the insurance company? So that's where we come up with the rebuild value, or the dwelling value is what you would see on your declaration page. So it's going to be different from the market value and the appraisal value, and you might say, hey, I can sell my house for $600,000, but you're insuring it at $450,000, and I'm saying, well, it's only going to cost $450,000 to rebuild it, and maybe yes, you can sell it for that $600,000 because they're factoring in the land and the school district and other things that are in the market value that we're not looking at. So that's why you'll see that difference there, and people question that a lot.
So in the last couple years, we've seen prices drastically fluctuate and for the most part go up, especially when it comes to construction and stuff like that. Is it possible that the rebuild value that was 5-6 years ago is different than it would be today? And how do you go about adjusting that? How's the insurance company? Do you just talk to an agent and be like, hey, I need more insurance now?
No, that's a great question. So with every policy that I personally write, I know we have what's called like inflation protection. So you will see your rebuild value go up every year, and that's kind of just a manual thing that automatically is going to happen, which is great because, again, prices change, things go up, and we are seeing increased costs now just because of materials and labor going up to rebuild these homes. So you're seeing higher rebuild values maybe than you did 5 years ago, but we do have that inflation protection in, so that way every year it does go up a little bit. You might see your premium go up a little bit because you're getting more coverage. So that's one factor. Another thing is that, if you do any major improvements to your home, like say you put in a new kitchen, you add a deck, you add a swimming pool, different things like that, they're all things that you want to call your agent, hey, we need to kind of reevaluate this to make sure I have enough coverage to protect my home. And then we have what's called I always call it like a little buffer. A lot of companies do this, but I always make sure it's on my policy. So whatever your rebuild estimate is, just say it's $450,000, that's the rebuild value of your home. We put like a 20% buffer on that top of that. So 20% of whatever the dwelling is, whatever that number is, that'll be over and above the $450,000. So even if our estimate was a little low, or there's things you didn't account for, didn't tell me about, we kind of have a little wiggle room there. And, you want to make sure that with insurance, the whole idea is we are going to make you whole again. We're bringing you back prior to what it was prior to the loss. So we're not going to, give you a huge, great updated kitchen if that's not what you have. You're kind of going to get the basic stuff. And, that's kind of what your loss settlement's going to be.
What is, as far as homeowners insurance, when it comes to your possessions and everything? I remember years ago, someone gave me some advice. I probably read it online. They're like, oh, well, instead of doing a home inventory, you can just take a video of your house, and you can make sure you video your house so you can see what's there and what's not. And then at one point I talked to an insurance agent, and they were like, oh no, we go off of income, not actual possessions or something. And so is there something should I be listing should I have a list of somewhere of everything I own, or how's that work?
Yeah, so definitely with homeowners and renters insurance policies, you'll have, and condos too, personal property coverage. So with the homeowners, it's usually a percentage of whatever dwelling is, you get that. So it might be overinflated. So if it's 75% of that $450,000, that's what your personal property coverage would be. And for the renters and the condo side, you would pick, I would talk to you, how much stuff do you have? What would you need to go out and buy if you lost everything? What kind of, thing would you want? So that's how we come up with those numbers. And I always say I don't know that many people do it. It's not a bad idea to video things, or maybe have a list of important or high value stuff. So something that may be of high value to you, maybe like a musical instrument or some jewelry. Those things we either want to have scheduled or just have some documentation somewhere of them, because we want to replace them for you. So essentially, I always say in claim situations, an adjuster will come out and investigate and advise. So they're going to come out, they're going to see, if there's anything left, if there's a fire or whatever the damage was, and they put their estimate together based on what you have. And with the policies that I write, I always want to make sure they're replacement value or replacement costs, you'll see. So what that means is we're going to fully replace your items with something of today's kind and quality. So if you have a TV that was maybe 5 years old, we're not going to give you that depreciated TV. We're going to give you a brand new TV that's similar to what you had. So that's very important versus actual cash value. You might see that, or ACV on some policies, and that's replacement cost minus depreciation. So if you have that on your policy, they're taking, whatever that cost of that 5-year TV would be today and giving you that. So they're not looking at just replacing it with a new one. So you're getting not as good of a valuation in my standpoint. So especially for people who maybe have older furniture, older things. Like you want a brand new couch. You don't want, hey, here's $200. That's all you're going to get for this couch.
Well, I'm thinking of like computers and stuff.
Yeah,
like
that too.
I mean, I do a lot with tech. So, so I was like, well, if I lost my laptop, that'd be pretty devastating. But now that my laptop's 3 years old, it's like the value is a quarter of what it was when I paid for it. But I wouldn't want to buy a used. Yeah, that would stink. If I lost my if my lost my computer in a fire and you're only giving me $400, and it's like, well,
what am I gonna do with that?
I need a $2,800 laptop.
Right.
Just because it was only technically worth $400 doesn't mean I can just go out and buy a used one for $400 and be completely made whole.
And the consumer, the client, like looking at, you have declaration pages that gives you all your coverages. I'm sure no one has really looked at them, but giving that to an agent like myself, I can pinpoint these and say, did you know that you had this? Did you know you only had actual cash value replacement on your roof versus replacement? And people are like, I didn't know I had that. I didn't know that. My agent never explained that to me, but because they don't really know what they're looking at sometimes when they see these things. So I always say every 3 to 5 years, have someone like myself review your policies, because life changes so much.
Are there policies that have actual cash value on roofs?
Oh yeah,
because I'm thinking about it. Like my roof, maybe it's 10 years old, still another 10 years of life. But if my house burnt down, I'm going to need more than half the cost of a roof.
Correct.
To fix that.
And that's a biggie I see some major carriers doing. And basically they would depreciate the replacement value of your roof each year it got older.
Yeah.
And clients of mine didn't even realize that. And they're like, are you kidding me? I didn't know they were doing that. I'm like, it says it right here.
Yeah.
But I understand. No one really looks at this stuff. Or when they do, they only look at it when there's a problem or a claim or an issue, And at that point, it could be too late. But the every 3 to 5 year mark is good, because you got to figure your life is constantly changing. People are, getting married, having babies, getting engaged, buying houses, someone maybe passed away. Any kind of major life event is a trigger to do this review, just to make sure you still have what you need, because even with the auto insurance, you may have started a policy maybe when you were a college kid on your own, and you have state minimum limits of $1,530. Now you're a successful real estate agent and you're doing really well, you still have this state minimum auto policy.
Yeah. Up until a couple months ago, I'm pretty sure I had the same auto policy of when I went to college or something like that.
That's a little scary.
Yeah. And then and all sorts of I was just recently I realized one of my cars wasn't on my policy.
Oh, wow.
I bought it. I can't remember the whole. It was I got it, and then I think I just haven't gotten it was less than a year ago or so. Didn't realize that we never actually added it to our insurance. So we would have figured it out once we went to go inspect it. I would hope.
Yeah.
But yeah, it's just something that no one really wants to think about insurance.
No,
because
it's not fun. It's not glamorous.
ideally, you would never need it.
Hopefully. And that's what I always say to people. I hope you never need me or have to call me with a situation, but I'm glad and I'm always happy to be there if you do. So it's peace of mind. And back to the car thing, the dealerships or the sales guys will tell you, I'll call your insurance, I'll add the car for you. Don't believe that. Call your agent, call your insurance company, get it added. We need to speak with you. You're the policy holder. We're not just going to add a car to your policy without having somebody say, yeah, I actually bought this car. And typically they want ID cards or something, before you leave the lot with the vehicle, to just show you have coverage. A lot of times we'll get those calls. So, but yeah, I always double check if they say they're going to add it for you, because I've had people call me months later and was like, my Audi was never added. The sales guy said he was going to call. I'm like, I can't tell you if he called or not. I don't think he did. So, rather be safe than sorry.
Yeah. And you also had me thinking about where is my stuff right now? So another question is, what about your valuables that aren't at your house? and what happens, because I'm thinking, like, now that we're talking about this, I get really, like, I'm like, oh, you like musical instruments. I'm like, oh, well, actually my musical instruments at my church right now, and my computer and a couple of my expensive video gear is in this office right now,
right?
So I'm kind of like, okay, what happens to I have personal property at my employer, in an office, and something happens to that office. Is my homeowner, like, does my homeowner's insurance like get affected by that, or?
Yes, that's a good question. So personal property typically on insurance policies is covered anywhere in the world, right? So all your personal property, if you had like a storage unit that you rented out and you put stuff in, it would be covered there.
Okay.
Where it gets a little dicey with the personal property you're talking about, is it used for business or is it just your personal? So your guitar that you're playing at church, to me, I'm like, that's personal. That's just something you enjoy, you're doing, you're not getting paid for it.
Right.
That's just your personal use. So, but if you were out doing gigs at nightclubs and stuff, that's a whole different situation. So, it's the use of the items too. So you want to make sure that, if it's used for business, maybe you have a separate business policy covering specific cameras and, video equipment and things like that to make sure you have the proper coverage on it,
So what would be the risk in not having that separate policy? Is it the insurance company could say, oh, you were using this for business, we're not going to cover it?
Yeah, they could exclude business use, or there could be a maximum limit on the business use. Like, we'll cover personal property with business use up to $2,000. So you'll cap out. Personal property, some of the special limits, some things that have specific limits are your jewelry. So a lot of policies might be like anywhere between $2,000 to $5,000 for jewelry. So if you have high value jewelry, some people do, you want to schedule that on your home policy. So that means you give me an appraisal, we add it on there. If there's something that happens to it, you get that full replacement, to where if there was a scenario where you didn't do that and you lost, $30,000 worth of jewelry, I'm going to say, hey, you cap out at $5,000 on this policy, and that's all we can do. So that's the importance of scheduling those higher value things. And a lot of times you can schedule jewelry, silverware, furs, musical instruments, things like that.
What about like power tools and woodworking gear and stuff like that?
I've gotten that before, and they said that it's covered under the personal property if it's just used in your home. But if you're using it for like,
on a site,
if you have like an HVAC guy or you're a construction guy and you're using it there, then you need to have it under a business policy.
What if you're selling the things that you're making with the equipment and tools?
Oh, that's a good question. I mean, I don't know. I would still think that would probably fall under some business use because you're making a profit with the use of the tools,
Right, but it's in your house.
Right, but people have like hair salons in their homes, so you can have like the home policy to say, hey, there is some business use here. They have people coming off and on the property to get their hair done, or they have a chiropractic office in the garage, or people do different things like that, and there are certain carriers that will accommodate those kind of risks. So,
and that's also why it's important to have an actual agent and not just go to a web form,
and have these conversations,
which I've done before.
And you get a million calls maybe.
Oh my gosh. Well, and I've I've bought insurance just by like going to a website, signing up, filling out all the things, and like, okay, good, I'm done.
And then
covered. I remember I was talking, not me. I knew a story of someone who was talking to an insurance agent and was like, and the agent said something about, oh yeah, like, and you have to tell your insurance company if you're renting out your house. And I'm like, wait, what? And they're like, yeah, you have to, if you're renting a house out, you have to tell your insurance company. That's a different thing. And I'm like, oh yeah. And this person was like, yeah. And they realized like, oh, I'd never actually told my insurance company this was investment property.
Right.
Now you would think the insurance company, like, I think what this person said was, well, they should know, because why else would I have two property insurance policies?
Right.
And with these bigger companies where you're just dealing with a web form, like, no, they're not
looking. There's nobody really looking out for you or having those conversations. And definitely, like, that's the thing that people do. Like, they'll keep the house, move out, and move into another house.
Yeah.
So if you start renting out your prior home, you're going to need what's called like a landlord or a rental policy that's going to offer you coverage for the structure, but we don't need that personal property coverage on there anymore because your stuff's not there. So right there, that cuts out a lot of that.
Yeah.
You want to have a little more liability there because you have renters are, in there. So liability coverage is also a component of the home insurance. So it protects you if somebody were to sue you for getting hurt on your property or things like that. So, maybe we increase that. Maybe we go a little higher with the deductible because it's not your primary home. So there's definitely, conversations to be had. Always have your renters carry renter's insurance. A whole nother animal, with the Airbnb and things like that have started. There are carriers who will accommodate that now, because before it would just be, you rent it out your home to one person. They had a lease for a year.
Right.
Well, now that's becoming popular where, maybe people rent their house out for a week or two at a time. So,
Well, the other thing, too, is that usually an Airbnb is furnished by the owner, whereas a rental is unfurnished.
Correct.
So you would need something that would cover the furnishings.
Correct.
But not necessarily. But you would need probably less furnishing or more furnishing coverage, you would just need to talk to someone about that.
Right, and make sure you have the appropriate amount. Even where it's not furnished, personal property can fall under the refrigerator, the washer and dryer. So you still have minimal coverage for that kind of stuff.
Yeah.
But if it's somebody you're just renting to full time, they're living there for the whole year or so, you're not going to have as much as you would if it was your primary residence.
Right.
So, and if you don't have an agent or you're just doing this stuff online, nobody's really looking at. You're just putting it in. And then when a claim comes up, they might say, oh, well, we thought this was your primary residence. What's going on here?
Right.
And it could create hiccups for you, but, you just want to make sure everything's kind of done properly.
Yeah. Absolutely. All right. Well, that's awesome. Real quick, what's the best way people can get a hold of you?
Yeah, definitely. So as Sean said, my name is Maureen Felizzi. My direct office line is 610-884-8502. Hit option 1 to get me. And then my email is maureen.felizzi@libertymutual.com. I do have Facebook page, social media, so you can always reach me there too and find me that way.
Yeah. and the best thing is just to schedule a conversation with you, and you can go over what the needs are and see if it makes sense. And
definitely, it doesn't cost anything to have a conversation and talk to me. Email me your deck pages.
Yeah.
If you have a great policy, I'll tell you to stay where you're at. If there's anything I can do to help you improve your coverage and maybe reduce your cost, I'd love to do that. I have over 25 carriers I can shop with, so and I want to make sure my clients are properly protected.
Yeah, awesome. Cool. Well, thanks a lot.
Yeah,
really
thanks for
appreciate
having me on. It was great.
Thanks for listening. This has been the Chester County Real Estate Podcast, brought to you by RE/MAX Ace Realty, serving buyers and sellers in the Chester County area. Subscribe for new episodes at acerealtypa.com/podcast. And you can find us on Facebook, YouTube, and wherever podcasts are found.